Welcome to the GLIO CEO Investor Video Series. My name is Simon Ong, Portfolio Manager at ClearBridge Investments. Today I'm joined by Miguel Stilwell, CEO of EDP. Thanks for joining us, Miguel.
Thank you, Simon. It's great to be here, and thanks for GLIO for hosting this as well.
I would also like to start by thanking GLIO for hosting this event and for all the work it does to promote the listed infrastructure asset class. So thank you, GLIO. Now, Miguel, it's an exciting time to be a company in the global electricity sector. But for those that are not familiar with EDP, can you introduce the company to the audience, talk about your business mix and how it's trended over the last few years, as well as moving forward?
So we're a leading global clean energy company. We have a very strong presence in networks and also in renewables. More than a third of our business is actually networks in Iberia, Portugal, Spain, and also some in Brazil. And then we have a very strong presence in renewables, mostly wind, solar, and batteries, mostly in the US, Europe, and then some in South America and Southeast Asia. It's a very highly contracted, very highly regulated, very low risk. So 80% of our EBITDA is actually regulated, long-term contracted, which I think is quite distinctive. Networks is a big part of our investment. So actually it's been trending over the last couple of years upwards. It's now almost half, 45% of our net investment. And that's just driven by a much healthier investment environment, at least in the markets that we operate in. So we've really been sort of accelerating our investment in networks. And finally, just a note to say 80% of our EBITDA is in A-rated countries. So between Europe, US, some of the countries in Southeast Asia. So a lot of sort of core markets, very highly rated.
That's really good context. Now, also know that you guys presented your strategic plan last November for the years 2026 through to 2028. What are some of the main financial targets coming out of that strategic plan, and how are you tracking so far?
Yeah, so as you said, we announced it at the beginning of November, a 12 billion euro investment plan out with targets out till 2028. Most of that investment, as I say, going into those core markets, whether it's in the US in renewables, mostly solar and batteries, or in networks in Europe, Portugal, and Spain. Around 7.5 billion of that is in the renewable space, and about 3.5 billion plus in the networks, which is a very significant increase versus the past. I mean, it's almost 70% increase, at least, for example, in Portugal, and around a 40% increase versus sort of the previous regulatory period in Spain. So a significant step up in the investment in networks. Also, an important part of our plan was deleveraging. So we have a solid BBB rating, and we've been sort of very firm about keeping that rating. We have been deleveraging over this period, or we expect to continue deleveraging over this period. And we also have, let's say, a dividend policy, which I think is one of the distinctive things that we've never cut our dividend. Like over the last 20 years, it's been trending consistently upwards. And I think that's something that we're also very proud of. So we also have a very solid dividend policy. Finally, I think just to say we are trending well. So even though we announced it in November, we already had some forecasts for the end of the year and for 2026. I think we ended 2025 very well, better than guidance, better than consensus. And I think we start off on the right foot now for 2026. So still early days, but I think going well.
Yeah, I saw the results and definitely tracking very well. So very pleasing to see from an investor's perspective. Now, you mentioned Iberia representing a big part of your company, and obviously more than half of your operating earnings. And that includes markets like Portugal and Spain. Why are those markets distinctive markets to invest in? And what's your view on the risk-reward proposition for those markets as well as the growth prospects moving forward?
I think it's really interesting because, if you think about these countries, maybe they wouldn't be sort of the obvious picks, but actually Portugal was the Economist's, the newspaper's economy of the year last year because of the high growth, because of the solid macro. If you think about it, like we're actually running a budget surplus. The debt to GDP has come down below 90% from, it was 130% sort of a couple of years ago. Corporate taxes are coming down, personal taxes are coming down. So we're actually on a very good trend, I think, from a macro perspective. And Spain is also doing, very well as well. So actually, those are two very strong countries from a macro perspective. The Portuguese bonds, sort of the 10-year bond, which is typically a good measure of the risk, is trading at the lowest spread to the German Bund sort of since ever. So I think that's a good, let's say, context for us to operate in Iberia. The second thing which I think is really interesting about Iberia is we have some of the lowest prices, energy power prices, anywhere in Europe, comparable with the Nordics, and a very high penetration of renewables. And so I think it also just shows that it is possible to have low prices and a high penetration of renewables, and that's conducive to having a very good, let's say, context also for industrial development, for data center growth, and we've been seeing actually demand and power growing quite significantly. I mean, Portugal, it's 3.6% growth in 2025. That's very significant. In Spain, almost 3% as well in that period. So a very competitive power, very competitive context for the sort of, let's say, the broader industry. So I think it's just a good macro perspective, but also sector, let's say, context.
Certainly, from a utility investor's perspective, as well as policymakers, affordability is definitely one of the key issues that people are focusing on currently. And it's good to hear that with your value proposition, that in those markets that you serve, affordability is much more contained, and customers enjoy that. So that's great to hear. Shifting to, I guess, North America and the US in particular, obviously you guys have wind, solar, and battery storage in that region. It represents, I think, just under a quarter of your earnings last year, and continues to grow. So interested in your view on the main drivers of growth in that region, and where do you see the business risk?
The first thing to say is, we've been in the US for the last 20 years, and we've been through the different cycles, different administrations, and I think we've always bet on the US as being a great growth market, and it has been certainly for us. What I'd say is that we now have good regulatory stability. We have the big, beautiful bill that came out last year, provided that visibility from, let's say, in terms of the tax credits and the support for renewables all the way out till 2030, at least for wind and solar, and for batteries even beyond that. There's a lot of demand in the US. And so one of the things that people ask me often, the fundamentals are there. The demand for power is very strong. And the only technology that's available to be deployed in the short, medium term is renewables. It's wind, it's solar, it's batteries. Nuclear will not be deployed anytime soon. That's maybe well into the 2030s. Even gas is capped in terms of how fast that can roll out. So we're seeing a lot of demand for renewables, which is our core business in the US. So I think that those fundamentals are there, and they're leading us to have very attractive projects, to good risk return prospects, sort of highly contracted, long-term, sort of 20-year type PPAs, and with very high single digits, in some cases even double-digit project IRRs. So very good investment opportunities there.
Yeah, definitely good to have the tax credit issue resolved through the new One Big Beautiful Bill. Certainly, as an investor, huge focus on getting clarity around that aspect, and there's obviously safe harboring provisions and a more modest phase down. So that's good to see. Makes investments more palatable moving forward.
I just say that the US is, we have EDP Renewables as a listed business, and it currently represents over 50% of our, let's say, the EDP Renewables EBITDA, but it's expected to grow to almost 2/3. And so, a very material amount of our investment is actually going into EDP Renewables US platform. So we continue to see that grow over the next couple of years.
Yeah. The other part of your capital allocation is into Brazil, and it's not a small amount. I think last year was about 17% of your EBITDA. Why is Brazil an attractive place to invest from your perspective?
Yeah, so again, we've also been in Brazil for 30 years in this case, and also through the different cycles. And I think, we do have that long-term perspective. I'd say that first, the regulatory environment in Brazil is actually very, for those that are maybe not so familiar with Brazil, it's actually very sophisticated, very stable, very predictable. I think one of the key issues in Brazil has been obviously the macro, FX and interest rates over time. That's where the volatility comes from. It doesn't actually come from the sector. But one of the interesting things about Brazil is everything is inflation linked. And so there is sort of a natural hedge to that. Certainly on the distribution side and on the transmission side, all the revenues are inflation linked, and even on the generation side. So Brazil can be a very attractive market, and it has been a very attractive market in terms of growth opportunities, as I say, both on the network side, but also on the generation side. Things have been normalizing in Brazil. We had a period now of very high interest rates and low inflation. but we now begin to see sort of the interest rates starting to come down. In fact, just this week, yesterday, there was already the announcement that there was a decrease in the interest rate, sort of the benchmark interest rate. And so we expect that to trend downwards. The final thing I'd say about Brazil is, in terms of the actual market, it's continued to liberalize. So we're getting this unbundling as we have in some other markets, and they've already approved sort of this next step of the liberalization on the retail side, which I think will also be interesting in terms of opening up the market to new business models, choice for the customers, and us obviously being able to compete there and use some of the competencies and some of the skills that we have from other geographies also there in Brazil.
Yeah, that makes a lot of sense. There's been a little bit of volatility in, I guess, electricity prices globally. Can you talk about EDP's exposure to any wholesale energy prices?
Yeah, so that we get that question quite often. I think I'd just to reiterate, one of the things which I mentioned is that 80% of our EBITDA is either regulated or long-term contracted. As I say, the networks business by definition is immune to that, so it's just 100% regulated. But even on our generation business, every time we do a new investment, whether in the wind or solar or batteries, typically it's like 15, 20-year contracts, which obviously give us a very high degree of predictability in terms of the revenues. And so that's a very big part of our business. Obviously, we have older PPAs, which are sometimes running off. Those then become merchant, but we typically hedge those also forward. So for example, for EDP as a whole, for every 5 euros per megawatt hour sort of change, let's say in the Iberian pool price, we have roughly a 45 million change in our net income, which we currently have around 1.3 billion of net income. So that gives you sort of an idea of order of magnitude. But I think the final thing is that we have some portfolio diversification. The fact that we operate in Europe, we operate in the US, and we operate in Brazil, what we're seeing is dynamics where we have slightly decreasing power prices in Europe, but we actually have increasing power prices in the US and in Brazil. And so these end up offsetting each other. And I think that's one of the things about diversification.
In terms of, I guess, that diversification, is that something you would take advantage of as you're going through a recontracting process in the US?
Yes. So, that's been one of the key highlights. It's not something in the immediate short term because, as I say, a big part of our business is either contracted under PPAs or hedges. But as those hedges and PPAs roll off, so towards the back end of this decade and certainly well into the 2030s, we are seeing very good repricing opportunities for some of the older PPAs that were perhaps with lower prices, and you can recontract them at higher prices, or even hedges that you can recontract up. So definitely, and you'll know this well, affordability in the US is becoming an issue because you are seeing these prices trending upwards. And that's driven very much by the demand that I mentioned. You have higher demand, and if you're not getting enough supply into the system, you're going to start seeing those power prices trending up over the short, medium term, and that's what we're seeing on the ground. So yes, we believe that those repricing opportunities will be there, and that will be another source, I think, of value for the company.
That's very clear. I guess with the amount of growth capex that is expected over the next few years, I guess the ability to finance that growth capital is critical to success. EDP has a financing strategy that involves asset rotation. Can you just talk about this strategy and what you're also seeing in terms of valuation disconnects between listed and unlisted markets?
So as you say, asset rotation strategy, the asset rotation strategy for us has been core for our business for many years. I mean, we sell about 50% of everything that we build. And that's just because we have a lot of good investment opportunities. And I think we've been very successful in actually then taking some of those assets, selling them to third parties that have perhaps a lower cost of capital. And then we redeploy that capital back into our business, to be able to generate higher IRRs and to be able to grow faster. What we've seen over the years is that demand has been very strong there. So we have, done dozens and dozens of asset rotations portfolios over the years, both in Europe, in the US, and Brazil. So, we've seen the demand globally. The type of profile of investors has also changed over time. Sometimes it's gone from financial investors, sometimes more strategics. I think we're now back into a world where we're getting a lot more demand also from other financial investors again. and also the type of assets that people look for, whether it's very highly contracted. Then when we had the energy crisis, for example, in 2022 and 23, then investors were looking for much more sort of uncontracted, so merchant exposed assets. And so we had some assets that suddenly just increased massively in value just because of that exposure. The fact that we have a very big portfolio in multiple geographies with multiple different sort of profiles, whether it's highly contracted or some with merchant, means that we can go on adapting our asset rotation strategy also to the markets at any particular time. I think that's been a big source of value for us.
That's very clear. Is there anything else that you'd like to mention that we haven't already asked?
No, I think, listen, we have an ambitious but realistic business plan. We are very focused on, as I say, on the networks, and we've seen a paradigm shift in terms of the way the regulators are looking at our networks business. And so they've become much more supportive from a regulatory point of view, even from a government point of view. So as I was mentioning earlier about Portugal being in a good macro position, so they've actually been taking some of the extraordinary taxes that we had in Portugal, and so it's improved significantly the returns on our networks business. And so we're materially stepping that up. And I just want to reiterate that because that is a big part of our value proposition. And the second part is on the renewable side. So this growth that we're seeing in demand has to be supply. You have to have the supply to meet that. And that data center growth, we're seeing it in the US, but we're also beginning to see it very significantly here in Iberia. One of the data points I sometimes give is one of the data centers that's being built here in Portugal will represent 20% of Portugal's energy consumption.
Wow.
So that's a material increase in demand that you're going to get over the next couple of years. And I think we are uniquely well positioned to capture that. So, good growth opportunities, low risk portfolio, highly contracted, and with good investment opportunities ahead of us.
That sounds great. Exciting times ahead. Well, Miguel, thanks for the great conversation. For those wanting to learn more about EDP, where can they find you?
So they can find us on our investor relations page on our website. It should be relatively easy to navigate there, where we have all sort of the detailed information, whether it's the capital markets day presentations or sort of our annual and quarterly results. And obviously you can also reach out to our investor relations team, which is their contacts are also available online.
Perfect. Thank you, Miguel, and thank you, GLIO, for providing this platform. And don't forget to look out for the next interview in the GLIO series. And bye for now.
Well, thank you, Simon, and thank you also to GLIO. I think it is good that we have these type of conversations because I think the infrastructure investment class, I think it's a really exciting sector to be in at the moment. I mean, there's just so much demand for infrastructure investment. So being able to get the word out, I think, is super important. So thank you.